video. Dornbush download 175.
Sure it's not 176.
Inching closer to 200. Inching. Any ideas as to Dornbush download 200? I mean, bear in mind, you want to get paid? Oh, no. No, we're not going to do that nonsense.
I reckon Michael and I'll do it and have a couple of beers and a big seafood platter. And
I'm liking the sound of this, and I'll just sort of be doing the bunny rabbit ears behind.
That's it.
That'll be fantastic. Interesting week in share markets, Dan, and interesting that, 5 days, what 5 days can do. Last week everyone's running around with their hair on fire. The world's ending, and the correction we had to have. And today,
and then US inflation wasn't as bad as what they predicted. There was some producer prices come out last night as well, put out by their Labor Department. That was in line with what they expected. So that was, I think, prompted last night's buying over there.
And you know what really drove the inflation number the other day? It was apparel. Like, it was clothes. People are freezing their backsides off. Of course they're going to go out and buy blankets and jumpers and all that sort of stuff. So I think it's a bit of a... we have to be aware of the fact that bond yields in the US are rising, and so therefore there's probably a greater chance that people will start pulling money out of the US share market, buying US bonds because they can get a better rate of return with a lot less volatility. Like, that's a given. But to sort of expect that the share market's going to drop another 10, 15% on the back of that, especially considering how strong their economy is going, how strong, in fact, the world economy is going. I read an interesting thing yesterday that David Scoot put out, the Business Insider, David, and he was talking about, sort of like a variation of the economic clock. But basically it was talking about 4 phases, and really for, share markets to fall in a heap, you actually need to see the credit markets fall in a heap.
Yep.
And we're not seeing credit markets fall in a heap. The last time we saw them fall in a big heap, of course, was the GFC.
Let's not mention the war.
We won't mention the war. But, so in other words, like, the inference was that we're getting closer to sort of the whole economic cycle having gone round, but we're probably only 2/3 of the way around at this stage. So,
the other thing that's happened in the last couple of days is the dollar's come off, which I think is what Trump wants. It's what our RBA wants, but we don't seem to get it, do we? Trump wants it. And that's been positive for oil. It's been positive for commodities.
Absolutely.
So it's interesting times.
So I guess what we're saying is, from a volatility point of view, volatility is back, baby.
Yep.
Volatility is back. And so you have to sort of work out what type of investor am I. Am I a trader? Well, if I'm a trader, fantastic. After 2 years of this, now's your opportunity to start playing that volatility. But, if you're an investor, and in particular, we make light of volatility, but if I'm like a retiree and I'm watching things bounce around, it is concerning.
Yep.
So you've got to sort of position yourself accordingly and say, right, well, do I have some cash back to take advantage of that opportunity? Do I just hold cash back to try and minimise that volatility? Do I do off-market investments like unlisted property or whatever to try and smooth out returns? But work out what you are. Work out whether you're an investor or work out whether you're a trader. Because if you don't know, you're going to get crunched. You've got to position yourself accordingly.
Yep.
This week, profit reporting. Telstra, thanks very much. And who else? Seriously.
How many should I list?
No. But seriously, the Telstra result, what did you think of the Telstra result?
It wasn't too bad, Andrew. The disappointing part for me was they've only guaranteed that dividend for 2018. 22 cents for 2018. They haven't pushed that out any further.
And it's a big drop from 32 cents just 12 months ago.
Yeah.
So I guess, are you a buyer of Telstra at these levels? Sorry, poison chalice question.
Yeah, it is a poison chalice question. From an earnings point of view, it's still not too bad. If they get this 5G up, that could be quite big for them as well. And so, it's still a good yield at the moment. But am I a buyer? That whole telecommunication sector is just so far out of favour at the moment. I think we need to see that turn around first.
Technically, and you do a lot of technicals, and I'm sure you'd agree. Technically, the sector looks terrible. Like, you wouldn't, it's mother-in-law stuff.
It's really interesting, isn't it, Andrew? I was just looking, this mother, I was just looking at the health sector, and HealthScope came out, their report was pretty ordinary.
Sonic.
Yeah, Sonic, Ramsay. But you know that the health sector has gone up and these companies are coming down.
Because you're in the wrong
something's
ones.
got to turn
You're in the
there.
wrong ones. The one you need to be in is
CSL.
CSL was a cracking result.
It was a cracking result.
You know, like market was expecting 16 to 20% increase in profit, which is pretty aggressive in this type of environment, up 31%. So, you know, and I've been saying to the guys in the office for a while, CSL, and I think mostly agree, CSL should be a core portfolio holding if you're looking for growth. If you're looking for income, forget it. You know, it's a 1%er. But they're going to spend like $500 million in R&D this year. Like, that's pretty impressive, but it's pretty scary because if, I think, what are they calling it? Internally it's called CSL 112. If it doesn't work, you know, you're just standing there burning $100 notes.
Yes.
But, you know, every time they have a win from a diversification point of view, it just further grows their earnings. And in particular at the moment, we're in flu season, not only in the UK where it's terrible, the Australian flu, but also looking forward here to Australia for our upcoming flu season. Like, they are in a very good position to make significant sums of money trying to protect the population from what is potentially going to be a pretty ordinary season.
And it's out there now. Influenza A. So.
Well, we've both been talking to clients that sort of sound like they're under weather, or, you know, and it's only, February. So CSL, you're right, some of those other ones, Cochlear's result was okay, ResMed's result was pretty good, but it's interesting, you know, there's a real compare and contrast between those like that are sort of in the medical services provision, you know, some of the ones you just mentioned, primary, Sonic, whatever, and they're getting crunched by the government and they're getting crunched by the healthcare funds, and then on the other side, sort of the, you know, the blood companies or, you know, non-medical providing, they're doing incredibly well. So you just got to be on the right side of that healthcare trade.
Well, they're really providing to those services providers, aren't they? So that's where the money is.
And they're not getting crunched.
Yep.
I think that's probably about it. I think
you've
we've been
waffled enough.
loquacious enough. Till next week.
Cheers.